liquidity. I've always been talking about putting your sales, becoming smart when you want to trade in the market. Okay, I'll be explaining kill zones. Kill zones are specific time periods where there are if the liquidity or the volatility of the market is at their highest. So these time zones primarily are used by institutional traders or banks or retail traders to make large orders in the market efficiently. So we retail traders use these time zones to anticipate the price movement to our advantage, based on the market structure, based on the trend, based on the direction of the market. We use the kill zones to make sure that it's at our very big advantage. So understanding kill zones, you need to understand the accumulation, the manipulation, and distribution. Accumulation period is during the Asian session where you have ranges or sideways movements in the market. So in this period or in this time, you can have series of equal highs and equal lows, okay, ranging in the same support or resistance level. This period is commonly occur during the Asian session. So the Asian session open in the time of the midnight period, which is like the 9 p.m. to 8 a.m. in the morning. So this period are used by the inner circle concept. So you must understand the accumulation, which is what I drew currently. So after understanding the accumulation, you need to also understand the distribution. The distribution is picking from where the Asian session starts from. This is the Asian session. So the distribution goes like this. Okay, then we have another uptrend moving this way. So this part is the accumulation part. Let me just put it as accumulation, okay? And here is the manipulation. So the manipulation most time is just to manipulate the traders, thinking the trade is going to go in a particular direction and it won't go in that direction. It's just going to pick the stop loss and continue another trend come. So this part is for the distribution, which joins the manipulation part from here. Okay, you can have lower high and to the top. So hypothetically, you can have an example like this form. Okay, so you have the accumulation, the manipulation, and the distribution. This is the distribution. Okay, and it is always during the New York session. Okay, this very one is in the London session. The time zone might be different from, like the time might be different from where you are in the world, but they are basically key timings that you need to understand. So when you open the trade and you discover a ranging form, okay, this is probably the Asian session. Sometimes it can happen in the manipulation session as well, but it's mostly in the Asian session. And when that happens, what you need to expect is a manipulation coming in, moving to the upside, forming a higher high, thinking it's going to continue the ranging form, but you won't know that it's just to manipulate the trades and go down to pick the stop loss, make a few ranges, and go to the distribution session. So the stock market opens to influence the forex market and the indices market, right? And extreme volatility often lead to fake outs, breakouts, and also the continuation of the real move in the market. So ICT traders tap in when they understand any of the sessions or any of the direction that happen in the market. So you can be like an European trader, or you can be like the Asian trader, but you must make sure that the manipulation of prices is well understood by you so that you can know when to tap in into your entry or your exit for your liquidity grabs or momentum trades. Okay, how do you use a kill zone in trading? You need to look for the liquidity grabs. Okay, the liquidity grabs, remember that when you're in a trade and you have a ranging session or a ranging or sideways movement this way, going this way, okay, you agree with me that this side, the top part of this price is the resistance and the bottom part is the support, okay? And this is the Asian session, right? This is the Asian session going down to the top. So the top is like a fake continuation to go above the resistance level. So if the price is going above the resistance level, okay, this is a breakout to the top side. So breaking out, creating a new higher high, forming a new lower low, higher low on the resistance level signifies that this is going to be an uptrend. Okay, but a trader might wait for a few more candles to confirm, or just look at the time that particular trade or direction is moving, and you could just see a downfall of prices, changing character completely. Okay, this form means that the market makers often induce stop loss hunt before the real move. Okay, so I can tell you that this is an Asian session move. Okay, this is an Asian session move, and to this point here, we have our London session move. Okay, our London session move is at this point here. Then the real move happens in the New York session. So the real move happened in the New York session, picking it from this part to the upside, the distribution move. So you need to be able to combine the market structure, the breakup structure, chain of character, so that I can have a strong confirmation before you can enter the trade. Because using just a mere trading tool will not give you a good assurance of a profit or a good risk reward ratio in the market. So you need to also make sure that you're not trading outside the kill zone, because this particular example I just showed to you on the screen is a kill zone pattern. Okay, so this is basically just using market structure, breakup structure, change of character. This is a ranging trend, right? It's a structure, it's a ranging trend, continuation, right? Accumulation. And from the lower low here down to the top, forming a new higher high, higher low, higher high, okay, is a London session just to fake it to you that, okay, the market is continuing to the uptrend, but not knowing that after the peak of this high for that period, then there's a huge sell back to where the Asians start from, or maybe even not up to, but even below where it starts from, going down to the downside. This is a stop loss hunt. Okay, you know that there are series of stop loss at this point. Okay, when you're buying to the top, there are stop loss at the bottom, right? So all the stop loss at this point must have been swept by this huge change of character before forming the major move for the day in the New York session. So you must be able to combine change of character, the breakout structure, knowing the trend, the sideways trend, the uptrend, the downtrend when you're trying to trade in the market. And most institutional traders or most retail traders use order blocks, fair value gaps, and liquidity zones during this period. Okay, let's use an example of the real trend in the market. Okay, this is an hour candle, and this is Great Britain pounds versus the Japanese yen. From this point here, you can see that we have a new uptrend to the top here. Okay, after that, you can agree with me that this part here is a ranging form. Okay, we have a ranging form from here to this part here, this part here. Okay, this is a ranging form, right? Okay, and this ranging form led to the downfall of the price, thinking, okay, the price is going to go down here and continue the trend, but from this point, it fell straight down to this part. Okay, so I can tell you that this part is an Asian move. Is an Asian move. Okay, so I can say that this part here is a London move. Okay, and you can see the fall of the price to this point, even if they are like some breaks. Okay, still have some breaks here to the top. Then we have a full break here. Oh, let me just put it here. Okay, from this part here, this is a continuation of the trend, and this is a New York move. You agree with me? To the upside. So the distribution of that to the upside. So if I'm selling from the Asian move down to the London move, I know that there are stop loss at this point, all stop loss at this point. So you can have series of money in this zone here, because this part is the liquidity. The liquidity zone. This zone is a liquidity zone. Series of money. We have plenty of money in this zone here because all these push to the downside to create this form are liquidities. Okay, stop losses, selling, stop losses, selling, stop losses. So when I'm going to the top, when I'm buying, stop loss at the bottom, but this period of selling, stop losses. Now, this is a New York session, right? And because the market is closed currently. So you can see that we have another new ranging form currently in the Great Britain pound versus the Japanese yen. Okay, if I want to trade this currently, I'm going to look for the area of interest. Where particularly can the price move to? That should be my interest. Okay, this is the peak of the price. Okay, and from the peak of the price, there's a ranging move. Okay, a ranging move continuously. Okay, if I want to trade this, the first thing I need to know is that is there any economic data? That should be the first question. Is there any economic data? What session is next to open? That should be my next question. Okay, and I can say that, okay, the move happened at the close of the New York session, right? So what is going to happen is that in a hour candle that we've been having, the price is likely to continue to go ranging. If there's any economic news that can change that, if there's no economic news that could change that, then we're looking for a sell to pick all the stop losses here that move the price to the top. So we might be looking at stop losses hunt again, if not to the downside to this point, but maybe at least up to where this liquidity is, because it's an equal high. Okay, so hypothetically, we can have a range coming from like this, like this, like this, okay, and to the top again. Why? Because the area of interest is at the downside of the price because we have so many liquidity here that haven't been swept. So many liquidity. Remember, in an hour candle. So this is my target that, okay, the price is likely to attract, the current price is likely to attract this liquidity here. Okay, so I'm targeting this range as the area of interest. So the price is likely to attract this liquidity here to form another base of liquidity, then divert to the top side. Thank you so much for your time. My name is Bash on Air.